Welcome everybody to Monday Morning Call with Paul. We got our special guest here, Matthew Murray. Just in case, I know a lot of you guys have seen him here in Zoom, but just to give you an idea, Matthew Murray was the Director of Sales and Marketing for IFG, a huge IMO that specialized in Medicare, and they actually sold the business to Humana for $100 million, and that was due large in part to what our special guest here, Matthew Murray, was able to help them grow to. So, hey, Matt, thanks for jumping in on Paul's call. Really appreciate it, man.
Absolutely, man. I appreciate you. And yes, Samir, it's my first time on camera, so I'm very nervous.
Yeah. Just so you guys know, he does have a podcast and the whole social media background, and he even does coaching. So definitely tap in with him before the end of this call. So I kind of wanted to just kind of jump in on what you and your agency is. But before we got into that, you left IFG, is that right?
Yeah, I'll give you the shortest story I can.
Okay.
When I came there, I was employee number 8. We grew it, it's here in Wilmington. We grew the home office. We had about 130, 140 people that worked at the home office toward the end of it. Across, we had people that were remote, but I was a large part of recruiting for that. We got into Medicare, and it was when I saw the jet fly over is when I realized that I screwed up, that I didn't build it for myself. I built it for somebody else. So it took me about, we sold it in August of 2022. We had a big change in leadership. When new companies come in, there's corporate change that come in. It came in like October of last year. And it was very shortly after that, in late February or early March, is when I decided to put in my 2 weeks notice and started my own thing.
Awesome, man. And you kind of moved in towards the final expense life insurance, right?
Yeah, I got classically trained on final expense, meaning I went to like the considered a school of final expense, so really hard training when it comes to final expense. And that's mostly where I got a lot of my sales skills, was that, and it transfers over into Medicare and all this other stuff. So it helped us on that side. But a lot of what I'm known for is just knowing how to sell final expense and how to have those awkward conversations with clients and going, Mary, you're going to pass away and you need coverage. It's just a weird thing to talk about, right?
For sure. So I'm sure a lot of people are not aware of classical training per se. So where did you go exactly to get trained?
Yeah, so I worked at a great company called Lincoln Heritage Life Insurance Company, and I was in an agency called Universal Benefits out of Sumter, South Carolina, and they were regional. So if you're going to work in basically the East Coast, you went through this one person. Well, they only sold one product, and that was it. And it was just Lincoln Heritage Life Insurance, right? Yeah. And they would have us go out to this every single week. We would do the exact same training over and over and over and over in front of hundreds or thousands of people at a time. And what it does, if you train on that in front of all these different people, when you get inside of a client's house and talk to them, it becomes the easiest thing in the world.
Yeah.
So we train like the Navy SEALs, and then they had like a whole thing where we paid like $200, and they gave me a certificate saying I did it, right? So they go through of how to door knock, how to present, how to close, how to do all these different things, and it takes about a week. But once you learn those skill sets and then you apply them, the selling of it becomes the easy part.
Makes a lot of sense, right? So being that you so focused on that, but you still have the Medicare and you still have the sales and marketing background, why did you choose final expense as the primary for your agency when you left IFG?
It's something that I understood, and I'm a Christian man, and they're all God's people, and I think that senior citizens that are on a fixed income, final expense kind of has this like, well, there's going to be a ton of chargebacks and all this other stuff, and I'm like, well, these people are going to pass away. And so my heart goes out to the senior citizen. So I realized that I can duplicate my efforts by teaching agents how to classically, how to sell this stuff and do it right and not have a ton of chargebacks. And it's a great business to be in. I just think a lot of times it's not taught properly.
Yeah, that makes sense. What's some of the things that you would say is good tips for the agents here that would help them, because it's always been that if you do a lot of final expense or live transfer final expense, you're going to get a lot of chargebacks. What's some tips that you guys use to minimize those chargebacks?
Start with something. You don't have to sell a large premium. The average final expense policy is $62.50 a month. So when you start going way outside of those bounds, and I see some agents are like, well, I'm doing $175 a month and I'm doing $200. Well, that's just a recipe for Chargeback City, right?
Absolutely.
You get what I like to call payday loans, right? That's just not where you want to be. You want to be, final expense at its core is just about being average, right? So if I can sell the average policy premium, all that stuff, if I'm hitting the average, well, then I can make a ton of money, because final expense sales is just what I consider pipeline math. I buy this number of leads, I set this number of appointments or this many live transfers, and I'm going to come out with this many sales with this much chargebacks. Here's how much money I'm going to make every single week. It's just systematic for me.
Yeah.
And I'm undiagnosed ADHD, and I have some form of autism. So just things that are very systematic. Once it made sense to my head, it was like, oh, I can just do that.
Yeah.
So it made sense to me as to why. But when you understand that it is just one big math equation, and all you have to do is plug in your numbers, then it just becomes a dial of like, okay, I can increase the number of leads to sit down with more people. If I sit down with more people, I'm going to close more. But the compounding effect of closing more over time, right? I have this many leads, but instead of closing at 25%, I now close at 40% of my sales because I suck less. I'm going to drastically make more money, because the premium size doesn't change. It's just how many people you talk to on a weekly basis.
And how many you end up closing versus when you first start, you're brand new to it, as opposed to you've been in front of 100 different people, you know all the objections. Now you're closing at a higher rate. And we talk about that all the time, is really knowing your numbers here, right? And how to break that down, because it is important. That's the only way you can really project the direction your business is going to go and kind of see the growth pattern that you'll eventually get to. Now, one of the things we kind of talked about was that, I asked you directly, hey man, you're here in our Zoom all the time. What's something that you think will really benefit our agents that we just don't talk about, or maybe we didn't know to talk about, right? And I asked you that because of all the background that you have and how much knowledge you have. And the thing that you hit me with, and I was like, he's right, we don't talk about it, is conversations with carriers. And so these guys don't know what I'm talking about. Can you kind of dive in what it is that you and your team does, and why those conversations with carriers help you guys close deals?
Sure. I've been doing this for about 9 years. I've taught hundreds or not thousands of agents to do this. I'm mostly a field guy. I'm coming in here and I have no idea how to do virtual. I'm watching people do it, and it's just I'm not good at it yet, but I'm starting to see the similarities. But what I can tell you is what I've noticed from virtual versus field is every single person I sit down with the field, and every time I train somebody in the field, when someone has a policy, we're going to review that policy with them. Now, when I say policy review, I mean, I'm calling the carrier and I'm having the carrier explain the policy, not me. Here's why. Mary Jones, who has had her policy for 10 years, doesn't trust the guy that just walked in her house, or just doesn't trust the guy that just got on the phone with her. They trust their insurance company because they've been paying for them for years. Does that make sense? So when you learn how to have conversations with the carriers and say, hey, can you explain to Mary what's going on with this policy? I would say over 50% of people have done something horribly wrong with their policy, and they have no idea about it. And I want to get into that a little bit. I kind of gave you some examples, Paul.
Yeah.
And you're like, hang on, don't tell me all that stuff yet, because I want to.
Yeah, I didn't want to make it organic for everybody to understand. So let's just kind of process this. So you're doing policy reviews with people you haven't necessarily sold. It's a lead that you got, and they already have a policy. They stated they have a policy, and you're saying, okay, great. Let's give Lincoln Heritage, or let's give Mutual of Omaha a call, and let's review your policy and make sure everything's going well with it. Is that kind of the opening, or how do you?
Not everything's going well. So this is let's pretend that Paul's the client here. Paul, you're 70 years old in this, and you had a policy since you were 60 years old.
Well, I'm damn good looking for 70.
All right.
Yeah.
Dang right you are. Paul, did you currently have any life insurance?
Yep.
What was the name of that company again?
I think it's Aetna.
That's a great company. Actually, one of our sister companies. We work with them all the time. Now, do you see what I did there? One of our sister companies. We work with them all the time.
Mm-hmm. And you said a great company.
Yeah, it's a great company.
Yeah.
It's a fantastic company. We work with them all the time. Let's go ahead and give them a call and dive in and see what's going on with your policy.
Okay, sounds good.
Now, I make sure everything is good. If you say stuff like that, you're taking away the control. Let's go ahead and do this. And so what I'm doing is, when they tell me that company, as I'm going, great company, I don't want to work with, I'm already Googling their number. And I'm already calling them in and getting past that, press 1 to do this, and the third. I'm doing that on the back end.
Okay.
right? And then I'm just, I would just merge it in when it comes, and then the person's like, and as soon as what's weird is sometimes the people are like, well, I don't want to, but as soon as their company, Lincoln Heritage Life Insurance Company, how may I help you? I go, hey, I got Paul over here on the phone. He had some questions about his policy. We don't know much about this insurance stuff. We asked to speak to a certified genius, so I know we're in good hands. Do you have a moment to help us? When you line it up like that, the carrier's going to be like, oh, these people are idiots. Like, of course I can help you. Person has no idea about insurance. How can I help? What they're also going to say is, Paul, is it okay for Matthew to speak on your behalf about this? What is your social? Blah, blah, blah. They get the verifying information. When they're verifying with the social, what do you think that I'm doing?
Writing it down.
I'm writing it down. I'm getting past the crappy part because they already trust their company.
Right.
Does that make sense?
Yeah.
So I'm getting a lot of things here. So then I'm asking stuff like, we're just going to go into this, right? So now we've got Paul, who's 60 years old or 70 years old. He's got a policy since he was 60, and he's got let's call it a $15,000 policy. Okay. All right, Mr. Insurance Company man. So Paul here, he has it says this is a whole life policy. Is that correct?
Yep.
Okay, great. So that means it doesn't go up and doesn't go down. The premium always stays the same.
Yep.
Okay. Good news for you, Paul. Your premium never stays the same. And Paul's like, that stays the same. I'm all good. Okay, perfect. Now, is there any outstanding loans or any cash values attached to this policy? Now, in this instance, and I'm telling you, over 50% of the time, people, our senior citizens, get in the mail all the time. Hey, Paul, you've had this for 10 years. Can't see this. You've had this for 10 years. You've got $3,000 that you can borrow on your policy. What do you think Paul does?
Borrow some money.
It's the money. They call in. Hey, can I borrow that? Now, in this case, Paul's borrowed $2,500, the max amount that he can borrow. Now I'm on the phone call and they go, yeah, he has an outstanding loan of $2,500. I'm like, oh, can you see how I changed my voice? Can you explain to Paul what that means? Well, that means, it's going to be the full death benefit. It's going to be the $15,000 minus the loan. Oh, so he doesn't have a $15,000 policy for this amount. Let's say you're paying 60. How much is 60-year-old for $15,000 in coverage? Someone find it. It's probably going to cost anywhere between $70, right? It's $70. So he only has a $12,500 policies for $70. Is that correct?
Yeah.
Okay. So the $2,500 loan, is there interest on that loan?
Is there interest on the loan? Yeah, absolutely.
100% there's interest. It's 8.7 or 8.9% depending on the carrier.
Yeah, it's higher than most people would think.
Correct. Okay. So if he's going to pay this loan back because I want to make sure that he has a full death benefit, you do too, Mr. Paul?
Yep.
Okay. So let's take that $2,500 and let's start paying it back over, let's say, a 3-year period. That's a pretty comfortable time to pay back up. So it's going to take you 36 months. Now it's going to increase your premium by $69.44 a month. So your premium's going to go up to about $140 a month. Now, is that comfortable or outrageous, Mr. Paul?
Based on my income, it's a little too much.
Got it. And if he does nothing Mr. Insurance Company man, if he just pays the normal premium, when that loan comes due, where's the interest going to come from? It's going to come from, guys, the remainder of the cash value. Okay. When there's no cash value left, Mr. Insurance Company man.
This is important.
When there's no cash value left, Mr. Insurance Company man, can you please explain what will happen to Mr. Paul's policy? Does anybody know?
It's going to be dead.
They'll terminate.
It goes into an overloan state.
Yeah.
It goes into an overloan state, which means there's no cash value left. He does not have a policy anymore. All right, Mr. Insurance Company man, let me just ask it in a very appropriate way. So what you're saying is he's got a $15,000 policy he's been paying 10 years for. He's borrowed money on this loan and the interest is coming due. And if he does nothing with it, when the interest comes due and there's no cash value left, he could essentially possibly lose his policy. However, he wanted to start paying it back, over a 3-year period because he wants to have the full death benefit. It's going to bring his premium up to about $140. Is that correct? And then the only other thing to get out of this loan is if you were to qualify for something new, if it was level coverage, because you don't want to You don't want to leave a policy if you already have one, right? But if he does qualify for something new and something more affordable, instead of that $140 premium to get him back to that $15,000 that he really wants, would you suggest that, Mr. Insurance Company Man? You know what the answer is?
I'm sure you're going to tell us.
They're going to say yes. No further questions, Your Honor. Have a great day.
And then basically you're writing them up into a new policy.
In the three-way call, and this is the conversation. Paul, what do you think we should do?
Wow, I don't want to pay 140 back, and I don't want to lose my policy.
Okay, do you want me to see if I can get you something that's going to be a little bit more affordable? Because you can start paying that $25 back, because then your premium is only $70. I might be able to find you something that's going to be $15,000. It's going to be a little bit more affordable for you. Now it might go up a little bit because you are older.
Yeah.
Right. But we want to find something that's going to fit your budget.
Yeah,
and then
if
there is anything left, you can pull the remainder out of the cash value, and you don't have to pay that loan back. Now, are you going to use the same bank that you used to pay Lincoln Heritage?
Yeah.
Okay. Run and grab your checkbook for me.
And then in this time, you're filling out the application. You got the social. You pretty much got everything you need.
Yeah. Now I'm asking the qualifying questions. Anything crazy I need to know about? Any medications? Any diabetes? Any sometime you got sometimers or Alzheimer's? Right. I'm going through the application.
Yeah.
Right. Okay. I have to. Sorry, Mary. I have got to ask you all these questions because I want to make sure you get qualified for level coverage. My job is very simple, to make sure you qualify for this coverage. Now, we cannot do this unless you qualify for level coverage. The important part of this, everybody, this does not work if somebody has, if they're in a 2-year waiting period. It's a no-go. And you got to make sure that you're doing proper. The important part is doing proper underwriting. Trying to just scoop people underneath and, barely get them through, because if that person does pass away and there's going to contestability period, you don't want that person to get non-contested.
That's something we don't talk a lot about. Can you explain to the group here what contestability is and how that can affect in the first 2 years of a policy?
100%. In the first 2 years of any insurance policy, if someone passes away, the company will do everything they can not to pay.
I think people forget that it's a business, so that's what they're going to do for sure.
Yeah, guys. I mean, this is the important part about what we do in life insurance, and people are going to pass away. And the insurance, the most important one is the one that's in force when you pass away. You know what I mean? And so if you put somebody on something and you swept them under the rug, you said you lost your leg. Now, can you walk around? Can you put a skate on it and kind of still move around? I'm not going to put that on the application. And you somehow slide it through to get the American Amicable level coverage. Well, that person passes away 1 year, 8 months from now. American Amicable is going to go, let's look at their medical history and see if we had to pay them. Oh, yeah, Paul lied on that application. Sorry, Mary. Sorry, Mr. Jones. We're not going to, sorry, beneficiary. We're going to pay all the premiums back, but we're not going to pay the $15,000 policy.
And that happens more than people know. And I would say, if any of you agents out there have ever gotten from an insurance company a form that they wanted you to fill out about, was the client in front of you, did they, was there anybody else in the room? It's basically a list of questions that they want to know. It's because it's in the 2-year contestability of the policy that you wrote, and that's what they're trying to do. They're trying not to pay out the claim.
Yep. They're again, insurance companies are smart. They're banks and insurance companies are the richest companies in the world. Insurance companies get rich by collecting premiums, try not to pay. That's just it.
That's why term is such a great product for them.
Yeah, it's a fantastic product, right?
Pays out less than 2% of the time. So that means all they're doing is collecting like an ATM machine.
Yeah, exactly. I mean, listen, there's people called actuaries, and they know that at my age, I statistically will live a lot longer. They can almost look at somebody and say, you're going to pass away at 83 years old in 13 days. And they're off by a month based on your health. They're so good at this stuff.
Dana White went through this, the UFC guy.
Mm-hmm. And you can't, the house wins every time in this. And that's why sometimes when I'm talking to some clients, they're like, Well, I could just save this money. Okay, well, again, final expense client. If you had, you wouldn't be 70 with no savings. I would love it if you would do that. But my job is to make sure that when you pass away, that you have this coverage in place. Does it make sense?
Absolutely.
You say it like that, or do they get offended?
No one ever gets offended. It's how you say it.
You gotta look at it this way too, you guys. Even if they started saving right now, if they died 3 months from now, that's not enough savings to get the 15 grand.
Correct.
So there's two sides to that. One, if they were savers, they would have already saved it and had it in the account, right? And then the other is it's an immediate benefit. So if something does happen, that's what insurance is. If something does happen, it's to protect you.
Yep. Final expense in its core is, we're talking about people who are on fixed incomes, who are worried about funerals and cremations and the cost of it. They do not want to leave this bill behind to somebody, regardless of what they take. My daughter knows exactly what to do, and everybody's a rocket scientist to tell time to go to the moon. I know what I'm doing. But when my grandmother passed away at 99, they all looked at me like I was supposed to know what to do. I had no clue. There's no plan in place, right? The other thing about final expense, true final expense training, is final expense life insurance is one thing to cover the cost. But then there's the thought process of, have you talked about this? What type of casket do you want?
Yeah.
You want to be burned and earned. Like, have you talked about these things, Mary? No, I haven't. Well, it's an odd thing to talk about, especially to a 25-year-old kid or a 34-year-old dude. It's a weird thing to talk about. So when you're going to talk about this one time, and you'll never have to talk about it again. Does that sound fair? Do you see the sincerity of my voice when I'm saying those things? It's because I really want them to think about these things, because it's an emotional sale. When someone passes away, who took care of it? Have you experienced someone, passing around the hat twice at church to take care of the burial? Have you had fish fries to take care of these things?
GoFundMe, car washes.
GoFundMe. It's sad, man.
Yeah.
Super sad. And these clients don't want that. And the older that we get, the more we realize that we're going to pass away sooner rather than later. Yeah. Yes, and I'm acknowledging the awkwardness. Yeah. And I'm acknowledging the awkwardness too. It is such a weird thing to talk about, Mary. But luckily for you, this is what I do. This is what I'm really good at. And so we're going to start today, and I'm going to find something that's going to be comfortable for you, because I really want you to get something rather than nothing. And if you have something, I want to make sure it's the best thing for you. Because if you don't do this, say you talk to somebody and you don't, talk about their benefits. What if they say, I'm all good, I got a $15,000 policy. But in Paul's case, 3 years from now, he doesn't have a policy. And now Paul had a stroke and a heart attack.
And I didn't have a $15,000 policy I thought I had, because I took a loan out on it.
Oh, he had $12,500, but then after 3 or 4 more years, when the interest keeps coming due, he goes into an overloan state and he doesn't have a policy. Now he's in a 2-year contestability period. And he's on a graded policy. Now he's got to get AIG. It's going to cost him more. So now he's got to survive another 2 years.
And still die in time, because if you're over 85, there's nothing. So you
know what I mean? Like this, it's so important what we do. And again, talking to the insurance carriers, and someone asked a really good question, Anthony Gonzalez. So who does the carrier think you are at this point? Hey, my name's Matthew. I'm Paul's senior benefit advisor. I help him out with a lot of stuff, helping him save money. And we had some questions about his insurance. That's it.
So you don't let him know, one, that you're an agent or anything of that nature?
Hell no. Because as soon as you say, hey, I'm an agent, oh, okay, looks like this person's going to try to, figure something out of the policy. They're pretty smart. They're not idiots. But that's why I also lead up with like, hey, we don't know much about this stuff. We asked to speak to a certified genius. You came on the line, so I know I'm a good hand. So you're like giving them the, and they're the person that's just on the other end of the line. They may be having a microphone just like his, and they're just talking to clients all day long. Their phone just rings all day long.
Yeah.
Call after call after call. And so if you're the person that's like, hey, you're fantastic, thank you for your help today, and blah, 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 they're a little bit more ready to like, oh yeah, I can help you out with this. Like, I know this stuff. Happy to answer questions.
Yeah.
And so you start easy, and you start with those questions, and you have a $15,000 policy. Is that whole life? It's good for his whole life. Good on you, Mr. Paul. You're giving them what they want. And then you're asking the tougher questions. and they're going to answer the questions truthfully because they have to. But it's learning how to do those things.
Yeah.
And that's why I'm excited. I don't know if some of you are, I'm so excited to go to Vegas, because it's a lot of what I'm going to be teaching on. It's getting on the call with carriers and having those one-on-one conversations and helping people realize what they have going on. I mean, listen, guys, loans, when someone starts a loan, it's a debt, and I was a finance manager before I got into insurance. And so when I understood this, it was like, okay, you have got to take steps to pay this back. You have to do it, because if this happens long enough, you're not going to have a policy.
Well, and then you think about it, what agents are trained all the time is that if you don't pay off the loan, no big deal. They're just going to deduct it from the death benefit. But people don't really realize that it could go so far as you losing your policy.
100%.
Yeah.
100%. Or they could just pay the interest. Well, Paul will 100%, but like, oh yeah, I'm going to pay that.
Mm-hmm.
Paul doesn't do it.
Yeah.
Paul doesn't do it. Sorry, our clients, most of the time, are not financially responsible enough to pay back the loan or to pay back the interest at a minimum. But remember that $15,000 policy that Paul had that he was so proud of before he got on the phone call. He doesn't have $15,000. I didn't tell him that.
Mm-hmm.
The company that paid for 10 years is telling him this.
Yeah.
Well, why didn't they tell you this? Why didn't that person tell you these things? Does that make sense?
Yeah.
And it's like, now the selling's over. What do we got to do to fix this?
Well, you found the problem and then you found a solution. So that's what sales really boils down to.
Got it.
Well, before just so in interest of time, I wanted to make sure that we got into marketing, something that was a big part of your job at IFG. And one of the questions that really kind of comes up a lot is when someone's a brand new agent or even a seasoned agent, right? At what point do they start branding themselves and how, right? That's like the big mystery for a lot of people, right? Mm-hmm. Is it really important to brand yourself? These are the types of questions that I think we get a lot here in this group.
Sure.
And I think people are not as keen to seeing what the future in insurance is going to look like. And so if knowing everything you know now, right, and you see the changes that are coming in insurance, is it important, do you think, to brand yourself?
So early on in my career, people saw me as an insurance salesman, but now they see me as a businessman. Mm-hmm. So what I mean by that is, before I'm like, oh, I sell insurance, right? But now I want to brand myself as the insurance man. Well, a lot of questions. Well, how long have you been doing it? Because people don't trust people that are just starting in insurance, because there's this bad rap of selling insurance and never talk to the person again, right? Because the fail out rate is high. And so when you stay in it long enough, you become that person that is a rock, who is the person you can always go to for insurance. You just gain this, you're just going to learn over time drastic amounts of knowledge about insurance just by being in the space and learning more about it. I didn't know about all this stuff until I was taught. I didn't know about how a universal life policy worked. I didn't know how term policy worked. I just saw a presentation. I can collect $50 check and get paid $315. I got my license and started selling. Right. It just takes time for you to learn all that stuff. But when it comes to branding versus, leads, early on, generate, get leads, right? Because you don't have that conviction of, I've been doing this for so long, I know exactly what to do here, right? And get your reps at bat. But over time, you want to start branding yourself as the person that does this and being a part of your community. I teach on being a part of your community, right? So here in Wilmington, I just got back from a clinic, and the lady that was doing my blood work was like, "You do insurance?" I'm like, "Mm-hmm." And she's like, "I can't get coverage, man, because I had something when I was 19 years old and I'm 55, and that State Farm won't cover me, and they've been my insurance company for a long time." And I'm like, "Girl, give me your number." She's like, "You can really give me coverage?" I'm like, "Girl, come on." That was different than before. I didn't have that confidence that I had before. It was a confidence of knowing that you can get that person coverage with the ailments that she just came across. So I got her number, and she's texting me, and I'm going to get her up. She's 55, and she wants to get good policy.
So just kind of circling back on that, you're saying that you start with your community. So in your own geographical area and you start branding yourself outward that way. Where a lot of people, it seems like they're focused on, I got 42 states of that I'm in,
Mm.
so I'm going to start marketing in all these different
No, no,
states.
no.
And
I think. Sorry, let me say that back. If you have the states, you want to generate leads in those states, right? You want to. Those are leads.
right,
There's leads, and then there's inbound organic traffic. The inbound organic traffic takes time. That's that's you and doing something long enough that people know you and they're like, what do you do again? I'm in insurance. They're not always going to ask about insurance, but eventually you're going to start getting those people that just
no,
that want to buy from you. But early on, you want to be generating leads because you do not have that gumption about you. You've not been doing it long enough that people go, okay, this is the guy or girl that I should be going to ask these questions.
yeah,
So early on, buy leads. Like just get leads, especially if you have the states. Your cost per lead can be significantly lower because you're doing multi-state, statewide. But all the meanwhile, so I'm saying do both.
okay,
Do both. You've got to start branching out and being a part of your community, but make your money with leads. Buy this number of leads, make this number of sales, make this much money. And then while you're out and about, learn how to market yourself organically.
Now, in this group, a lot of agents are getting into that social media, brand, building a brand, and then developing leads through like Facebook, TikTok, things of that nature. What advice do you have for the agents here that could, one, help them get started on the right path with that? And is there any sort of catchphrases or things that you would recommend using that would help them, be seen more or collect more clients?
Sure. I'll give you some of the advice that I wish I knew. 50% of video is audio. I'm going to say that again. 50% of video is audio. Okay. The other thing is download you something called CapCut. Take your videos, and it's simple editing software. Captions are huge. Most people don't view their Facebook or their Instagram with sound anymore, so your captions have to have some kind of engaging text that follows them along, right? But the main thing and the most important part is consistency. That's it.
That's the recipe for success.
People won't remember the 45-second video that you did explaining life insurance 4 years ago. But if you put it out enough videos where you're consistently talking about it, they're going to go, I know that guy knows his stuff, because that's not all he talks about, but that's what a lot of what he talks about or what she talks about. Does it make sense?
Right. Mm-hmm.
They get what's caught in your called content bank. Does that make sense? So like they go and then they're all of a sudden scrolling and it's just videos of you being consistent and saying the same thing over and over and over and over. Because then when they have a question about it, they're going, I wonder if I should ask that Matthew Murray guy. He knows a lot about insurance.
Yeah. No, that makes complete sense. You guys have questions, throw them in chat in regards to marketing or final expense. I had another question for you in
Sure.
the marketing arena. Have you found in your time with IFG, or is there specific marketing techniques that have worked well before but are not working well now? Like, can you kind of talk about how the dynamics has changed from, let's say, 10 years ago versus now?
To be honest, again, I'm a field guy, so direct mail is still prevalent, right? Facebook, Instagram, TikTok is kind of hitting this wave, and I'm seeing a lot of the wave being the IUL generational lead type thing, right? That's for the younger crowd, and so TikTok's going to be a huge one. Instagram's going to be huge. Not so much Facebook, but really not a whole lot has changed. I would say that the way that they interact with content is different. So, a lot of it is keeping it moving to where things are on the screen to keep your attention long enough to get you to focus on what I'm telling you to do. And there's a subline text of voice of me, of consistency that's telling you what to do. Here's what's next. Do this. Right? Ping, ping, ping. But their eyes are following the screen, but you're telling them, now you need to go down, click the link below, fill it out, and we're going to get this information to you. So there's got to be, does that make sense? There's
Yeah, it's,
dry.
it's exactly why we teach people that are running Facebook, TikTok leads that when you get the lead in, that you need to call them right away, because their attention span, if you wait a day, they forgot that they even clicked on it, right?
Correct.
Yes. So how important it is within seconds, even when the best marketers always talk about doing it within 60 seconds, even, right? Getting to that client.
Well, so I'll say this. This is where I'm going to go against the grain on this one. If I was on Facebook, I think about a lot of the client experience. I'm on Facebook. I'm a senior citizen. I see an ad for life insurance. I do not want to pick up. I'm on my toilet. I'm sitting in my chair or whatever it is. I don't want to talk about life insurance right now. So I use the automation to follow up with that client in like kind of over 15 to 20 minute period. I kind of warm up the client, let them know that I will be calling and we are reviewing your file. Like I use something called the Amazon method. So if you bought socks on Amazon, you don't immediately get socks in your inbox, right? You get something saying confirmation.
Not
Hey,
yet.
thank you for ordering the socks.
Yeah.
Right? Socks are on the way. We're going to be shipping it out, and then you get a shipping. Well, the thing is shipped. Be on the lookout for it, right? So you got to follow the path. Well, with this, it's like I built out something that's like, hey, we're reviewing your file, and then I would build something out that's like, hey, we need more information, right? So I'm getting a little bit more information about the person to get them to remember what they did, therefore why they did it. So a lot of what I do is when I'm saying, hey, remember you were scrolling through Facebook, and I'll do this on my hand. I'm like, you were scrolling through Facebook, and you stopped, and you saw an ad about this, and you filled out the information, and you put down this. I'm getting them to remember what they did, therefore why they did it. Not going, why did you fill this out?
Right.
Does that make sense?
Absolutely. Michael's got a question in the chat for you, and so does Elijah.
Those policy reviews, did you find that a lot of people told you their agent told them about had cash value, but failed to mention that taking the money? No. To be honest, guys, people buy these policies and then their agent never talks to them again. It's just unfortunate. It's just unfortunate fact. And so then they build up the cash value, and after there's a certain amount, the carrier starts sending out these letters saying, borrow the cash value, please. You have this in your account. Because I know it sounds crazy. They want the client to borrow on these cash values because they know what it does. The insurance companies are wildly smart. They do it for a reason. And so a lot of
how smart?
Wildly smart. And so so it's not the agent. It's not really the agent, and that's why whenever I sit down with the client, I'm like, look, this is going to build cash value and you're going to get letters in the mail. I highly suggest that you do not do anything with it. And if I'm replacing one, I'm like, look, this one also is going to build cash value. Do not touch it. And like, look, once we get this fixed, this is something that you're already comfortable with. You're already making the payment for the last 10 years. So this is going to be good for you, but you do not want to borrow the cash value because I don't want that to happen to my client further down the road.
And Michael, thinking from the client standpoint, right? Most of our final expense clients, they're on a fixed income, Social Security. So that extra $2-3 grand, that's very, very, appealing, right? You're thinking to yourself, oh, I can catch up on bills, or, oh man, this will give me the break I've been waiting years for, right? So it's an easy apple for them to pick, if you want to call it that, right?
Hey, I got $2,000. It's your money anyways. You want it?
Yeah.
Oh, by the way,
In small print.
You got to pay back, right?
Yeah.
And these people call and they inquire, and they're the insurance companies. They, do you have to pay? Do I have to pay it back? No, you don't have to pay it back.
Mm-hmm.
They don't have to. That's what they're not lying to them. No, Mary, you don't have to pay it back.
Mm-hmm.
Should you pay it back? Yeah, 100%. What will happen if I don't pay it back? They don't get that far. How would you like us to send you your funds? How much can I borrow? You can borrow the max amount. Max amount is this much. Would you like to borrow that?
Yeah.
Of course I would.
Well, Elijah has in here, how has the Amazon method affected your contact ratio?
It's pretty significant. There's a couple other things that I do to increase contact ratio. So I'll bring up data points through the CRM, like Simply Work, and say, I understand from our from the form that you fill it out that your birth date is contact postal code. So it'll put like 28411. Is that correct? And then senior citizens love to correct people. And they go, no, that's my zip code. My birth date is this. Well, it does two things for me. It lets me know that the person remembers what they did and therefore why they did it, but it also verifies that I have the right number for this person. So I'm looking for that engagement. And so that way, when I do call them later, the chance of them picking up are higher. So How has it affected it? It goes up 100%. It goes up. And again, I'm telling you from, on the Medicare side, last year we did 262,000 Medicare Advantage apps. Largely, a lot of it is people were doing the simple follow-up through the go high level using what I call the Amazon method, or they call it the Murray method at the end. But that it helps the contact ratio significantly because you're reminding people what they did, therefore why they did it. You filled this out. We're reaching back out to you. We're going to reach out to you soon if we have more questions. I'm going to review your file. We read your file. Looks like you're going to qualify. Can you call in? We read your file. Do you have time to talk now? Yeah. It's all about number of sits or number of conversations that you have with the client. That's it. The person that gets told no the most gets told yes the most.
For sure. Absolutely. Well, hey, again, thank you so much for joining the Monday morning call with Paul. Really appreciate you, man. I can't thank you so much for coming. I think you imparted a lot of wisdom here for our agents. And so we really appreciate you, man. Thank you.
Yeah, happy to help.
And we'll see everybody else next time.